So today we're going to talk about a stock that has been on fire recently. One of my best performing stocks this month, and probably the best performing stock that I own this month. It's had an absolute surge on the share price. And you'll be able to see here in the last 5 days or last week, this stock was up nearly 40%. And for this month, it's actually up 50%, which is an insane move. And the stock is obviously, as you can see, Card Factory, which is very surprising because a stock like this, a very steady performer on revenue and profit front, you wouldn't normally see a stock like this or expect a stock like this to be shooting or making moves this much. And we'll talk about why the reason is that we're seeing such a volatile share price in a positive direction of Card Factory recently. Now, I've owned this stock for around about 2 years, I would say, and it's been a bit of a frustrating stock to own. Now, prior to the CV situation, this stock was actually being ran quite badly, and you'll be able to see here that the share price was trading as much as nearly £3 in 2017, and through 2017, 2018, 2019, you can see the share price was just getting lower and lower, and especially around 2019, in fact that year was a pretty bad year where the business was run poorly, and you'll see here it went from nearly a £2 stock all the way down to 35p here. And if we have a look at the financials, you'll be able to see the reason why is because the revenue was always steadily improving on this business and moving up in the right direction. The problem is the profit margin went from 17% down to 11%, and the profit was just going lower and lower, so the profit margin was decreasing, and that's why the share price was not performing well going into the CV situation. Now, right before the CV, or during the CV situation, this was a wake-up call for the company. They had a change in the CEO, and the CEO since then has been doing very well. There's put a couple of new things in to try and help the business, and they're really achieving that with more online presence, through international, through partnerships, and it's actually starting to reflect massively in the business. And you can see here that from where it was in the pandemic time, 28p, as you can see here, we have had the share price start to move up in a positive direction and reflect the changes that inside the business is starting to happen from the new CEO. Now, the really frustrating thing is that when we entered around May 2021, we were nearly touching £1, which wasn't too bad of a share price for this. But unfortunately, May 2021, what started happening around that time, we started to hit the inflationary environment. We had stocks starting to peak out, and the more we went through 2021, the share prices of a lot of stocks into 2022 went lower and lower, and we were starting to see Card Factory get to the sort of levels it was at back at nearly the pandemic times, which was frustrating to see this business make so much improvement, and it was starting to get reflected in the share price, and then it just kind of gave it all back. Now, there's two ways to look at this. There's a way to look at it and then go, oh, it's a terrible company, that's why it's going down so much. Or you look at it the way point of view of going, okay, you know what, if you want to give me more chance to buy it at a decent price of 45p, I'll take that. And that's what I was doing through this period of time. You guys know this is one of the stocks that I've been buying while it's been a bit of a rough 12 months in the stock market. Well, more than a bit of a rough 12 months in the stock market. The worst stock market crash in the last kind of 40 years we've had to be put up with so far this year. And now we kind of got the rewards of the share price going up, and can it continue to go up? That's what I think the key thing is to look at, with this stock being on such a good run now. If you bought in them dips, you've got the rewards. Is it time to kind of release that capital? Is this a bit of a jump that is unjustified, or potentially is this stock still undervalued? Well, when we look at what's going on in Card Factory, the change in the CEO has been absolutely excellent, and what was a really positive sign is when the insiders then started loading up the boat around May time, around January time. That's always a sign of confidence. What else has helped is they've been paying down the debt and really starting to sound up that balance sheet, which is good, and I think they'll continue to do that. I think at one point or some point we might see dividend come back, but I think that'll be more when we see this debt pay down, which I would rather them do than paying out a dividend. So absolutely happy with that. And if we look at what the business is doing now, we can see here from the CV times, we're starting to have revenue go back in the right direction, and we're starting to have profit creep up as well. So it's a $1 million question, how far will it get back to the pre-pandemic levels, and what kind of profit margin will it put in? But at the moment, the business is really starting to turn around, as we saw in the last full year results. Now, what helped the shares surge so much this week is they came up with a trading update. And when this trading update originally came out, considering what's going on in the world right now, I was kind of the inflationary environment. I was like, oh, okay, this is going to be a bad trading update. And it was totally the opposite. It was an absolutely unbelievable trading update. So the trading in the second half to date has been stronger than expected. Like-for-like sales were up 6.2%. this is going to be really impressive because we obviously at the moment, this was supposed to be a year where Card Factory are a little bit flat on the revenue. Now obviously this is like for like sales, so we'll see what happens because obviously store closures and everything like that might affect it. So the growth isn't 6.2%, but if we still move into a positive direction, that'd be absolutely great because we're only expecting, this company going forward to grow, 3-4% a year. So that would be absolutely amazing. It also said that Christmas is a peak trading period for the business, as you probably guessed. We have been encouraged with the start of the season with sales marginally ahead of expectations. That's absolutely amazing. And I could confirm this. Like, I've been on the high street last weekend and the weekend before, and literally I've never seen it so busy. And you're literally looking around going, there's supposed to be an energy crisis going on in here in the UK, and everyone's still out there spending like crazy. And I thought, that does not surprise me to see that. As a result of trading today, the board now believes that EBITDA for financial year 23 will be at least 96 million versus the current consensus of 88 million. Unbelievable jump. And the EBITDA would approximate to profit before tax of 37.5 million, which is absolutely insane. Now, obviously we don't know what the profit after tax will be because there could be a few different fees in here. But I mean, if we just take it as a round figure that they do around about 30 million in profit, that would be very close to what analysts were actually expecting for January 2024. So this business is going to be potentially putting in the levels that we were expecting, not this year, not next year, the year after. So that will be so impressive and way ahead of analyst expectations if they do their numbers. So no wonder the share price is up 40%, 50% in a month, because when you have a trading update like this, that is insane what this business is doing. And what I'm going to do now is we're going to look at potentially, is this jump now a jump that is kind of like, it deserved that. Like a lot of stocks, it's beaten down. It was trading at ridiculous valuations, and it wasn't going to be too long until we saw a jump in share price, and that will follow probably some other stocks as well. Or is this a bit of a jump now where, okay, it was a good update, but it wasn't that good? So me, myself, I had to look and think, is it time to release some capital from this business? And by the way, I actually did on Friday sell 2 stocks. I'll bring them out in a few days' time. Unless you're on the Patreon, you guys know which 2 stocks they are. But is it time to maybe trim some Card Factory? So I've run some numbers on here. I don't expect them to buy any shares back because, when you look at the company, they're trying to probably build up a bit of a stronger balance sheet, I think, in these next few years. You'll see here that I put 2, 3, 4% amounts of revenue growth in. I think that 4% is the highest side. I would expect them probably to come around that 3% range. So I think that's very fair estimates there. Profit margin, I've put 8, 10 and 12 in. Now this is really tricky because I'm not 100% sure what the profit margin is going to be on this business a bit further down the line. Obviously, as you can see here, if we go back to the previous, before the pandemic, you can see here that they were up at 17% at one point, and it did drop down to 11%. And at the moment, it hasn't got back to them sort of levels, but I think it will do further down the line. So I just had to be a little bit cautious on the actual profit margin. So I didn't actually go that high. I put 8, 10 and 12. I think that's pretty fair. Earnings multiple was a bit tricky as well because it's never going to be a premium company. Obviously, it'll depend on the growth it does and the profit margins it goes back to. If it is a bit higher, then it'll command a bit of a premium, but that was really hard to forecast. So I just kind of went on what did it do previously, and you can see it traded at 14 times earning on average historically, and if you look at the market average, it's about 15 times. So I thought, okay, I'll be a bit conservative on this side than what I normally am. So I put a 13 times earnings down. So I think I've been very fair on profit margins, I've been very fair on revenue growth, very fair on earnings multiple. And you'll be able to see here that he threw back numbers of potentially 113% upside on the low side, 177% on the mid side, and on the high side, 245%. So yeah, I mean, that was like, whoa, okay, there's still potentially a lot of upside in this business here. And like I said previously, when it's traded at these multiples, it's been half, this is in the last 10 years. If you look at that, 5 of them years have been with the business pretty much declining. And obviously, as you can tell here, the business is now fully starting to turn around. So, I mean, does that trade at a higher multiple than what it has done previously? You look at the moment, it's still below its historic, 9 times earnings. So there's some upside there. Like I said earlier, it still hasn't got back to its full, potential profit margin yet, which you still got to put in there, which will obviously help. So yeah, I mean, even if I went on the low side, I can easily see this stock from here, going back to kind of a, where it was in getting towards 2021, a kind of a £1 ish stock, somewhere between £1 to £2 stock. So I looked at this and I thought, even worst case scenario, like it is suggesting it's undervalued, and even worst case scenario, I think this stock could potentially be up to somewhere between 90p to £1 worst case scenario. So I think if it gets there, then I would have to probably reconsider. If this run kind of continues, I might have to reconsider a bit of a trim. But at the moment, I think that it's still insanely, incredibly undervalued, and it should be higher. So at the moment, yeah, I'm pretty much happy to still carry on holding this one, even though it's been on a very good jump. I think that it's just been stupidly low for so long, and yeah, I think that ask me again at £1 or getting towards £1 if it could be, if we hit £1 next week, I might be my opinion might be totally different here. But at the moment, yeah, I mean it should never been 40p, and now that it's 69p, getting towards 70p, it probably is a bit more of a fair reflection. But even now, I'm like, it's still a bit low, isn't it, for this business, especially when you come out with a trading update like this, and you're kind of getting to the levels that analysts were kind of expecting. Not this year, not even the year after. You're kind of nearly a year and a half down the line. It's impressive. So yeah, I'm gonna hold this one, I think, at the moment, even though it's been absolutely amazing this week. So that's my thoughts on Card Factory anyway. So I hope you enjoyed the video, guys, and I'll catch you in a bit.